All right, so this isn't just a normal trade recap. I'm going to upload a separate video to this. Let me just move this across. Basically, what I'm doing is I'm testing out Tradovate. This is just a demo account, just to like learn the mechanics, how the gaff works, basically. Um, Never traded futures before, and I'm just eyeing up the possibility of setting up a couple funded accounts or a funded account in the future. Not right now. We'll stick to the live account on the CFDs, but pretty much today took a couple losses. It was a bit of a rough day on my live account. So uh, yeah, we'll go through them in a separate video. But yeah, I just wanted to have a look. So these are just random entries I've placed. There's no thought behind these. It's just to see how it plays out. Um, and yeah, just to get a feel for the platform. So I got 3 contracts in here. Aiming for TP there. I don't even have a stop set on this, so it's literally just pure experimenting. I can see a demo account now. So what I'm noticing is like just little things I didn't realize. So this is like this video is purely just like me testing, and it's education, just figuring shit out, and I just have it on document. So that's what this is going to be. So I'm noticing down here is, I think it's like all the sell orders get filled, or, within that you get a lot, and then that's what causes price to move, I think. So yeah, I've already placed a few random ones, as you can see. Just mucking around basically. We've got ES and NQ, and then you can obviously change the volume, or the order log, I guess. That's what you call it. What do you call this? I don't even know what you call this. Histogram. But pretty much what I was trying to do, I was just trying to figure out how to link multiple accounts through Tradovate. If I was to do, funded accounts going forward. And initially I opened the platform, there was like 3 charts up plus this histogram here. And I was just like, what the fuck am I looking at? Obviously it's a bit more cluttered than TradingView. It's just a 1 minute chart at the moment. You can see price clearly bearish here. Maybe looking for a bounce, or price going to come down here. A lot of volume up here, not so much down here. It's also lunch hour in the US, so that's another thing. But yeah, I don't really have too much to talk about. I just wanted to just test this pretty much, just see what's going on. Just a complete noob to Tradovate. Few things, I don't really like the chart mechanics. Like, it just sort of feels like way too squashed. You can do custom time frames and stuff, but yeah, like even the drawing tools, you have them, but they're just not as clean as TradingView. So TradingView is clearly the better interface. I configure chart. I don't know what does that do. So that's how I can change the colors and stuff. Indicators. So you can get all the indicators. But the main reason I was testing this out is because I think using my funded futures, if I was to do an account, I would have to use Tradovate, hang on, in order to do my evals. So just check the price here. 6864. There we got 6866. So these are different as well, which is kind of annoying, because ideally I would like to be able to look at TradingView and set up my stuff on there and then come into Tradovate and place the orders like that. But they're different, and you can't search ES1 on here, I don't think. Can you? ES1. No, you can't. So, don't really know what that's all about. Yeah, it's just interesting, very interesting, and just trying to pick out like different things that I'd need to look at before considering the futures account. Like I had a look last night, and I was thinking maybe, you know, this rapid one might be the best one. But I'm not sure if you can scale this. You can't. New scaling rule. Yeah, reset fee. There's no consistency rule, but there is a consistency rule in the eval. I'm happy with the max drawdown mechanics. I had a look at that last night. It's fine. Yeah, it would basically just be like risking one contract on a trade per trade and just making sure stops are in place and all of that. Yeah, as you can see, price is clearly bearish here, so we're in the wrong way by a long way. But yeah, still interesting. Range. Oh shit! I didn't mean to do that. No, I'm just going to 1 hour. Yeah, like the charts are just a fucking ball ache on here. If I wanted to go full screen. Whoops. Put that there. It's like, we're here. Can't just, you know, scroll like this. Like, it only moves. It doesn't like zoom it out unless you come all the way out like that. Now we have taken that low. Traded up into this higher time frame bearish imbalance, and price continued down. So yeah, just trying to figure this out pretty much. I do like how you can like hide your P&L. Obviously it sits up here, but so if you've got your positions open here, you can see it. Obviously a lot of people already know this that use Tradovate. But yeah, it's just interesting. Like, I don't know how it would work. Say, for example, if you wanted to link through TradingView, maybe it has to be on a live account or something. Maybe it has to be like an active account in order to do it. And then you can trade whatever the fuck you want. But yeah, like I say, it just doesn't really make sense, because on, so you go TradingView here. What was it? E8. What was it? ESH6, right. Yeah, don't come up. So like, what is it? This is still 867. Whereas this is 860. So strange, very, very strange. It's not really strange, it's just different markets or different pairs. Yeah, we go. Thank you. But yeah, food for thought. I don't really like this. Obviously, it's my first time using it. I could see how it would work, but like before, I was getting a bit confused with like the buy limits and buy stops and stuff. Uh, it's just that the mechanics on the chart are trash. It just doesn't move like you would want it to move. And this is definitely a losing trade. I think we're just going to cancel this.
Order filled.
Yeah, like I say, it's just complete testing demo to see what's going on. Do alerts. Yeah, I don't know if I like it. I don't know if I like it. Whatever, I should simple integration. Not trying to do that right now. But yeah, it's just more just for my information. See, sell, price just does what you'd expect. Oh, that does my head in, but you move it and then it just like snaps back into place. Template list, no. Oh, hang on, how do I do that? What the fuck? Can't like right click on here to like reset view. Like, I don't know. Weird. Trading view is definitely much cleaner to use. Like you can do this, do this, all of that. But yeah, it's just one of those. As you can see, do I keep this in one? Yeah, we'll keep this in one video. So, in terms of today's trading, I got schmacked. Absolutely schmacked. Down. How much are we down? Like 180 over 2 trades. Let me get a broker statement up. Yeah. 184. Sitting on 6 grand there. So I got schmacked. And I got carried away. I shouldn't really have gone in for the second trade. And it made me think more about, parameters for entry. How do I minimize my maximum losses? How do I minimize my drawdowns? And it made me think about patterns where, what tends to happen when I do go into drawdown. I tend to take another trade on the day and revenge trade. And then that made me think, well, how often does that occur? As you can see, if we go back into Q3 last year, 1, 2, 3, 3 losing trades in one day. 1, 2, 2 losing trades one day. 1 loser. 2 losers in one day. What else we got? 714. 2 losers in one day. Q4. Let's have another look. 1, 2, 3 losers in one day. 1, 2, 2 and 1. Break even on a loss. 1, 2, no. Put that back. Again, 2 losers in one day. So it makes you look, it made me think about the actual patterns to stop messing up my equity curve, you know? So I need to implement a 1 trade per day rule, and that's it. It gets no simpler than that. You get stopped, you're done. Come back another day. Because there's no point. There's no point going again. The psychology's off. Simple as that. And look, we got 9th of May last year, 2 losers one day. 8th of May, 1, 2, 3, no, 2. 5th of May, 2 losers again. 30th of April, 2 losers again. You know, this would have been 1 trade here. No, it wouldn't. Those are 2 separate trades. That would have been 1 trade there. And then here again, 12th of June, 3 losers one day. So it's clear, it's very clear. I take the most damage when I re-enter the market. And now this is something that's important for me to bring up because it's something that, you know, I'd mentioned before in my videos and in my journals. I'd mentioned it and I've said stuff, right, we're going to do this, we're going to do that, we're going to implement a 1 trade rule, or we're not going to do more than 2 trades. And then I do it anyway, just breaking the rules. And it just doesn't make sense. Actually looking back at the data, seeing, well, I take the most losses when I re-enter again the same day. Another example. Another example. That was a break-even one, so, but still. Granted, this was Q1 last year, this one here. But you can see the pattern. Like, this was a lower drawdown month. I was trading smaller size. But in the quarters where the drawdown was big, it was bigger size, and it was when I was re-entering trades on the same day. And reiterating it because it's worth reiterating for myself to know. And yeah, just interesting to note. So I am now implementing a strict 1 trade max per day. That is it. 1 trade max. So I get 1 shot. And if it's not right, it's my fault. I was wrong. That will at least force me to stick to my risk management, or at least improve it rather than getting carried away. Like today, I went short, wanted to see this low get taken. Price stopped me out. I did end up going back in long. Switch of bias. I was going for a reversal. Price did come up a little bit, but wouldn't have hit TP. I was aiming for the Asia high. So, yeah, just to put that in place, like if we look at last week, let's go in the current month. What are we in now? I'm now at the third week. So the first week of the year, 3 trades, 2 trades on 2 separate days, 2 wins. That was then followed by a loss. So that loss there was a re-entry on a day where I'd already won. It was a smaller loss. And then we had, does it say the date? On the 9th of January. I had 2 losing trades. Was it 3? 9th of January, I had 3 losing trades. I cost myself 260, 350 quid that day just from re-entering multiple times. And yeah, it's a clear and obvious pattern that I'm now noticing after this amount of time actually thinking about what's going wrong, what is happening with my mind when I'm losing. Revenge trading, emotional. Control it. Keep it simple. So, interesting stuff. With that to note, we're going to push out to the side. We're going to continue with today's trade recap. So, higher time frame. Let's move this to the corner. You know, we had a bank holiday yesterday. Take drawings off. We swept this low. Yes. Okay, fine. I was happy with that. I was trying to catch. No, I wasn't. I was trying to catch the retracement to target lower. We have 4-hour imbalance here as marked out. We tapped it. I wanted to see this get filled, which it now looks like price is doing. But yeah, just to note, it was the day after a bank holiday. It's Tuesday. There was no red folder news. We've got this big opening gap. Lots of uncertainty and indecision in the market equals this. This is when I was trading. Not nice. Like that. Yeah. Granted, this imbalance does get filled nicely. Push up. Broke structure there. Retrace. And push up. But that's not clear when you're in the moment. It's just messy. It's so messy. So, right. The first trade. Let's get into it. So this is yesterday. We drew out 8 to 8:15 15-minute candle. One thing I do now note, having reviewed some information on this model, is if the 8 o'clock 15-minute candle is a bigger range than 10 points, it's not worth trading, just because, you know, we're using a 5-point stop, 6-point stop, or on the NASDAQ 50 or 60. And, you know, naturally, if you're aiming at the midpoint, your stop's going to be right on the edge of that box rather than, you know, a few points above it. So that's something to take into note as well. My entry. What time did I actually get in? Let's have a look. So first trade, risk 2%, £123 stop. Entry was late. You know, what time did I get in? 9:32. Right, zoom in. Whoop. Appreciate this is very messy at the moment. So 9:30, 1, 2. Price trades up to the midpoint, came down. I went short to target. Well, ideally it would have been 843 to 823, 20 points. But due to the spread and due to late entry, it was 839 to 823. So 9 plus 3, 16 points with 839 to 849, a 10-point stop. So straight away, the risk to reward is already skewed when it should be looking like that, 3.28. Errors, just little errors that are messing with my equity curve, messing with my risk to reward. Now, I lost £123.81 on that trade, 98 pips. So 98 pips is like 10 points roughly due to spread. And yeah, in the moment, I said, right, let's not get carried away. Let's just call it that. Went on back to work. And then the next trade, price comes up off the midpoint, trades back down into it, starts trading up. I hit long. You know, we look at this to target the Asia high. I was thinking, right, so we're taking a London high now. We'll go long here. 847, 878. So that's 31 points. That's a lot of points with a 10-point stop. That is a 3-1. Yeah, fine. Okay, cool. Got an initial push up. This is on a 5-minute, so this isn't even in the right spot. So where did I actually get in here? At 10:43 or 9:43 because it's 9:43. So it's like here. So 84784. So it's more like this, right? So price bounced off that, and impulsively I pressed buy. Okay, so we're in. Get an initial push up, price comes straight down, and at this point, pushed up, is in about £60 profit. Price trades up above the London high, internal high gets swept, and we come back down. I would have been stopped out at full SL, but I trimmed it to this orange line. So this is only 5 points for £60, and that hit very quickly. So if we then drag this, pull it across, I shouldn't have traded today, but I did. I made one major flaw. I didn't give it enough time into the session to identify what was actually going on. Like if we look at the 5-minute candles here, it's a 9:30 candle, 9:35. Indecision, I was looking for a break and retest. Broke down here, we had all of this liquidity, retest. I was looking for this to get taken, and it was just so choppy. I got emotional and I paid the price. Now, if I had just done one trade, I would have lost 120 today instead of 180. It could have been more if I kept my stop where it was. So, I'm not going to say I minimized risk. I reduced it, which is the same thing, but I could have done better in not taking that second trade. And again, I've paid the price for it, and it just makes it that much more difficult clawing back the drawdown when you're re-entering trades, or when I'm re-entering trades on the same day. So yeah, it's one of those. It's not our day today, pretty much. And it's one of them. Ultimately, you make mistakes, and that's what this game does. Another reason for me wanting to go short was based off NASDAQ taking the London high at the 9:30 open. If we go into the 1 minute, skim that out. So it took it at 9:32. So where I went short on the S&P is where the Nasdaq took the London high at the same time. I thought there was going to be an S&T, and that's the key thing. I thought this was going to happen because of that, and I didn't wait. For confirmation. I was too eager. It was a 3-day weekend. We had the bank holiday yesterday. I was too eager, and I made the mistake. So, yeah. This isn't me beating down on myself. This is just being direct and being honest with what happened. I appreciate this is a bit of a longer video, and we had the bit at the start. But yeah, I've also been considering. The reason I've been considering the funded account is because, obviously, wanting to move out. Rent would take up a considerable portion more in a new flat than it would at home. Granted, I do still pay rent here, but it's just much more in my own flat. And just having that scale in an account, say with, a small monthly cost, $126 a month, that's a lot more manageable than trying to grow a live account with my own funds every month. So it is just something to consider, and this is why I've been thinking about it, why I've been looking into Tradovate, looking in how to copy accounts, which prop firm would be best to use. Unfortunately, I can't use Apex funding because I'm in Jersey. Like, if we search it up, this is what the website is: Apex Trader Funding. This is what happens, which isn't ideal. But yeah, it's just on the evals. You can't use TradingView for it. Once you pass it, you can link it to TradingView and trade through that. So lots of things to consider, lots of things to learn and note today. I'll keep this in mind. Like, I've set this account up now, so it is just like, just put that there. I think they have like an app you can download anyway, but we'll just save that for now. But yeah, other considerations. I was looking into gold bars today. Buy gold bars. Is it put on by post? Yeah. It's in euros. United Kingdom. So, with all the geopolitical uncertainty at the moment, obviously gold is already ripped up a lot in the last year, but it just is the trend with gold. Like, we go on a year. Let's go on the yearly chart. Like, we go all the way back from 2016, 2015, $1,121 per troy ounce of gold, to now being at 4,758, and it just goes up as the US dollar debases. They print more money, the value of the currency goes down. It's like $40 trillion of debt owed by the US government at the moment. And that's a lot of cash to be needing to be paid back. And the likelihood of that happening as everything is unfolding at the moment is diminishing, and people can see that. Like, you look at gold alone last year, 2006-16, at the start of the year, closing at 4,319. You know, that's a massive gain. And now, whilst holding, paper contracts like ETFs and stuff, you can do that. I was doing that. If I was to have gold, I would probably want it physical, because then no one can take it. If they shut down systems and stuff and you can't access your cards or whatever, what have you got? You've got a bunch of gold ETFs that you can't use. So having the physical would be probably ideal, to be honest. You know, granted they're a little bit more than the spot price due to the returns that these guys make. They're selling you gold, they do all the services, they're going to charge higher than spot price. The bigger you buy, the lower the spot price is. Where actually? Put it on back post. There we go. So this is different to the website I was looking at. I was looking at a different website. But it's kind of the same thing. I go bars. Either way. I'll have to have another look at this, because you can get silver and all sorts of stuff. But it could be a potential hedge move in the portfolio, just so I do have something physical rather than all in my eToro, all in my TradingView. Granted, it won't be a big allocation, but it would just be nice to have something. And yeah, lots of considerations today, lots of things. I guarantee this is going to get filled, see a reaction off it, whether it's today or tomorrow. If we get a nice reaction off here, inverse fair value gap, previous daily low, we can take today's low, maybe one more sweep below, and then you'd want to see an inverse upwards from there. And then you can use previous daily low, previous daily high model. Granted, that is what price wants to do, and it doesn't want to come down and take this low or fill this imbalance in over here. But yeah, lots of bits in this video, just more of an insight video. I might do this more of an NLY plus video than a market recap, trade recap. But yeah, futures, you don't get spreads. You set your limits, set your orders, and you get in at that price. You just pay the commission. Bit more accurate, especially with a scalping model. Makes more sense rather than getting slippage through spreads. So yeah, no more than one trade in a day. That's the main takeaway from today. No more than one trade in a day, because that is where I lose the most, and I now have over a year's data of proof and evidence of that. It increases my drawdown, makes it more difficult to make back. As a result, you get more emotional when you do lose again, and then you go in again, risk goes out the window. Same, repeat. Learn the fucking lesson, all right? So with all of that in mind, I'm going to end this one here. And this will be a good one for me to look back on in the future, at least. Hopefully I can see it will be, a turning point in the journey. And just somewhere I can just put some consideration in. So with that being said, I'll catch you tomorrow. I probably am not going to trade tomorrow because Trump speaks at 8:30. So yeah, too much movement in the markets. Not going to touch it. We'll see you then.